G'day traders, mindset reset. Today we're talking about templates, day 2 templates. So we're Thursday, Wednesday, Thursday, Friday, day 1, day 2, day 3. We can have 3-day setups. We can have day 3 breakouts in the market. And when we get distended out markets, we talked about this yesterday in the parabolic setup video about new month, new timing cycle. But what I want to talk about today is that every day is a template. And so we have day 2 from a Wednesday, Thursday, Friday, 3-day cycle. And one of my objective is to identify the best candidates with the best template. Now, I obviously have a predisposition to gold, and we had major red news on the calendar. But my number one priority is always to be able to identify a market that has clearly defined peak formation highs, peak formation lows, a consolidation, because that consolidation now gives us our reference for how price behaves when it gets to those levels in the timing window. As I repeat, levels, timings, behavior of price. And so does price break out and pull back and continue? Does it jam into the low, getting people shorting into the low of the day or into the breakout for an explosive reversal, or going long into the high of the day, trapping them up top for an explosive reversal, whatever that may be. And that's why it's important to understand day 1, day 2, day 3. So if Wednesday's our new day 1, that's our new high and low of the week heading into the end of our week. Monday's the opening range, Friday's the closing range, whether that continues as a trend or a reversal on free cash Friday. So coming back to this, keeping this intact up here, focusing on best trade setups, candidates. There's a lot of traders, and it's a hard habit to break, who get caught into trying to trade the movement. They're trying to buy low and sell high all the time. And if there's not a buy low setup or a sell high setup, then you could be getting in front of a market that's moving against you. Or if it's not a pump and dump or a dump and pump, and you're buying the pump and you're getting smashed on the dump, or you're selling the dump and getting pumped on the pump. So going back and understanding textbook templates. If you take a look at the Japanese yen today, 3 levels of rise, major red news, pumps up the 3rd time for the collapse, 3 levels, day 2, back to the low of the week. Go and look at the Euro-New Zealand cross, day 1, day 2, day 3. Same template, week 2, but it's over 3 days. 3 higher levels for the dump, first red day. So nothing's new. It's the same. It's fractal. So a day 2 template, that's one of the day 2 templates. We can have a consolidation, drop a level, and consolidate without taking out the low of the day. Pump up on major red news. New York Open, a second hit to the high. There's our micro M structure on top of the low of the week for a measured move of 50 pips, US Canadian dollar. Those are templates. So go and study your templates. Understand what you're looking for on a day 2. Oil, spot crude, West Texas. Nice consolidation, spot crude right at the high of the day. Vertical, goes vertical. It dumps down before the session opens. As one trader pointed out live, mentioned it broke structure just prior to the window opening. If it dumps down before the session opens, think dump and pump. Second hour goes parabolic. Parabolic, straight through the high, 75 pips. I think it might have even went a bit further on the second push, but vertical 75 pips, parabolic, free cash. A lot of traders are getting caught chasing the moves outside, or even on the news today. I said yesterday, 3 types of 1-minute candles. Part of bigger picture setups, always. Major red news, no matter what, you should have a bigger picture setup. You need a bigger picture setup if you're trading a best trade setup. It will explode outside of the range. That's a news catalyst momentum opportunity if it gives us the first bounce. No wicks. Number 2, we'll get a first bar entry. It will trap volume and will not come back. It will continue to move either from high of day to low of day for a measured move maybe, or from low of day to high of day and for a measured move maybe. We see that typically on a day 2. 3 levels of rise, first bar, bang, and it keeps going. Number 3, wicks both sides. Large wicks both sides. Typically, we'll see a second hour trade because that's a break in structure. What did we see today on gold? Wicks both sides. Went down and took out the low of our consolidation high low of the day. Pushed into the low of the day for 45 minutes. Before engulfing, major round numbers 50 for an explosive 50 pip reversal back up to double zeros. So nothing's by accident, nothing's by guessing, nothing's by luck. Everything is timed and measured. There are templates. There are templates, and they're going to repeat over and over again. So if we get a day two, we should be looking for consolidated markets. It's hard to trade distended out markets. You can get into something and it keeps going. But those are hard because, again, we're looking for rinse and repeat scalable opportunities. And also, we want to be able to get into something that, and even if you trade that explosive move after the news on the indexes, I'd be locking and loading or nailing and bailing or taking positions out. And if I felt that there was an opportunity for a continued range expansion, I would leave a small trailer in. These are markets that, although after major red news, it's day two. And so we're heading in towards the end of the week. We have Michigan, U of M, I think Michigan prelim tomorrow at 10 a.m. New York time, a third hour major red news, 10 a.m. So what that means is we could see stuff happen in that first 2 hours. No idea, won't know till I get there. I don't have any idea what things are going to do until it sets up, because I'm looking for what type of template do they set up on the day. Which is why when people say, what's your bias? I don't have a bias until I see how the day has set up. I want to see what they set up, and then I want to see the market show its hand. Today I said that, wait till the market shows its hand. They went vertically to the low after spiking both sides, trapping people down low, chasing momentum, 45 minutes, second hour, vertical move for 50 pips. Oil, explosive move, jamming traders in, chasing the move. They dumped it down first. Step back and remember what that box is. It's asymmetrical risk reward, even if it's only from one side to the other. Forget range expansions. Just target one side or the other. That itself is going to give you at least 2 to 3 to 1, depending on how well you enter and manage the trade, whether or not you're adding into something as it's accelerating. And then understanding that if it is a range expansion opportunity, such as we saw in oil, now you're talking 5 and maybe 10 times return on that trade opportunity. Make sure you lock in profits. But keep it simple. Step back. Quit getting caught into chasing the momentum. Step back. Be able to define your consolidation. Understand if you have a clearly defined template that you recognize. The better you get at recognizing the templates on the day, whether it's for a parabolic trend continuation, a parabolic reversal, or a low of day, low of session, parabolic move, high of day, high of session, parabolic move to low of day, session scalp, whatever that may be. We had some excellent templates. I posted those today over the course. We had Euro New Zealand, I believe Euro Oz, Pound Yen, Aussie New Zealand dollar, day zero templates, day 1, day 2, day 3, parabolic expansions, peak formation low, peak formation high, higher high, dump and pump on major red news, explosive move. These are textbook templates this week, which is why I keep reinforcing step back, because on day twos, if you're not focused on the bigger box, you will get chopped up. Study these templates on the day themselves. Understand what really well-defined daily templates look like, because that's what they are. They show up on any instrument, not just one index. Everything's the same. Every market is the same. Not one doesn't behave any differently. We can get markets that we might not have a best trade set up on for a few weeks, but they're all the same. They will show the exact same templates when they set up for a best trade candidate. Study those templates, know what you're looking for, know which templates are going to give you the easiest, most explosive, zero stress, zero emotion, free cash trading days, so that you can just walk over, pick it up off the floor, and get on with your day. Have a great day, traders, and may the markets go with you. Tomorrow is Free Cash Fridays. 2 types of trades. As one trader said, oh, you're changing your mind all the time about what it is. No, there's 2 types of trades: parabolic trend trades and parabolic reversal trade opportunities on Free Cash Friday. Have a great day, traders, and may the markets go with you.